So here's me. Quick reminder as to who you're actually hearing the audio from. I thought I'd give a quick wave. So hopefully going to be about half an hour today in terms of the length of the webinar, covering all the major Forex markets, commodities, and of course the indices, which are obviously a bit of a hot topic. Have we seen the bottom? Have we seen the end of the correction? We're certainly going to have a look at some of the charts. If you do have any questions at any time, certainly feel free to shoot them through to me. Right, I will get myself off the screen here and we'll switch gears to the trading platform. Right, so starting off on this daily chart for the euro. Let me sort my screen out a little bit here. We could do that, or we could do that even. So I think we, we're by many measures we're still in a kind of rising trend here. Very simply, of course, we're moving from bottom left to bottom right. So I'm still generally positive on the euro, but there are a couple of indicators here, a couple of indications, I should say, rather, that the trend is petering out somewhat. Not least the fact that we've had somewhat of a triple top up at 125. Of course, that can just be a pause before the trend continues. A level that I'll be watching quite closely, and you'll have to forgive me here because I've kind of been playing around with the new little fun tool, namely some arrows, to help sort of give a little implication as a sort of some of these sort of almost like if-then statements, I suppose you could say, in terms of what we could potentially do at different levels in the market here. So, for example, if I bring in this little, basically chucked in some arrows on the chart of what you've just already seen. But the idea being here that we've broken this rising trend line, and so we've come down to the downside. We've retested this kind of 2280-ish, which you could say, kind of put in a few highs along here, is where we were able to break through there. We had that reaction from it there, and it's obviously been these last two lows. 2880, that's where we've paused. We've popped back up to this 2360, which was that little high there, and sort of formed the lows a couple of times here. So it seems to be a bit of a pivotal area, and it happens to be where this rising trend line falls before the. So obviously you see a break of the trend line, retest, and another drop. So if we do get the drop, naturally come down perhaps to this sort of neckline of this double top pattern. From there, I'm not altogether convinced that we see a huge correction, which would be the total length, total height rather, of this double top pattern. That would take us closer probably down to these two lows down here. But first things first, that 2090 level is quite a significant one. So if we do fail right in the kind of junction we're at the moment, this 2360, there's a good chance we roll over to 122 and then down to 120.90. So there's some possibilities there. So what are we looking for? Just the usual kind of stuff, some kind of failures to break through the 2360, either a little pop above and then a close below, or just some clear failure pattern over the course of a couple of daily candlesticks here. And of course, if we get a close above the 123.60, then we're looking to potentially move up and retest these highs. There's no one high, but the round figure that really everyone's paying attention to is 125. So if you're conservatively targeting a continuation of a move back above this rising trend line, 125 would be the one. Right, so let's remove that off for now. So I hope that all makes sense. Switching gears to sterling. So don't always mention it a lot. I always have it on my screen. It's a bit of a crux, really, but you can see that we've had this series of lower lows, lower highs rather here, which have formed quite a nice trend line. In fact, we've touched it again today. But you can see on the RSI sometimes can be a leading indicator of what to expect in the price. And so to me, this is interesting that we've had these three peaks here, and we seem to have popped above it here. And not only that, but in the lead up, we've had a drop through the 50 level, obviously worrying that maybe the uptrend is unwinding. We popped back above it, and we've held it on the next test, and now we've broken through this rising trend line. So some indications here that cable wants to push back to the top side. So for me, where we had this strong rejection and also where this rising trend line comes in, a good interesting confluence of resistance here. Certainly it's already a bit of a trade, and it's the downside of talking midday on a Monday, already kind of missing a bit late for a couple of opportunities, but we're still in the kind of area. So obviously we know already from the fact that it's come off the highs, there's a potential short-term short trade there off that confluence of resistance. But for me, based on what's happening with the RSI and the shift in momentum, and the fact that we've held this rising trend line, we're back above all the moving averages, the overall general bullish trend in the market favors to me a push beyond this trend line. Now let's see if so there we go. So there's hold on, this isn't looking too good. It's cropped off somehow. Okay, that's a bit better. Oh no, hold on, I've gone back to the, I don't know why that's cropped. Anyway, it's the first time I'm doing this, bear with me. But you can see the idea here that we potentially get a push through this down-sloping trend line. Maybe we run into some resistance at that old high. So I personally wouldn't be looking necessarily for any particularly spectacular falls from there. But potentially it does come back again to the breakout area, where again we might get another renewed push to the top side and a retest of that 143 at the top. So for me, it all looks quite favorable at the moment. Obviously, should we fail at this area and then come down and break through this down-sloping trend line, then obviously we've got to consider some other scenarios at this point. But for the moment, it looks fairly positive for cable. Switching gears to a good old dollar yen. So we have quite a nice down-sloping RSI trend line here. The trend line, the price trend has been accelerating. So actually, in this particular instance, the RSI trend line has been a nice one to keep us abreast of the downtrend. As we stand at the moment, we dropped back from this 107.90 level. We took out the previous day's low with a nice bearish engulfing candlestick. We retraced about half of that bearish engulfing candlestick. Also back to this low that we kind of broke down from, the 107.30 level. And we headed lower overnight. I think that should be the, well, that's basically from today we've headed down to downside again. So we're struggling a little bit, obviously, at these little swing lows from basically last week's low. So we've pushed up a little bit from there, but that's to be expected. These things never happen in a straight line. Of course, we could have a failed break through these lows, and then it will be very interesting if we get back up to 107.30 again. But for me, for the time being, I'm assuming we get another push down through these lows down to the 106 level. And then, if I can bring up my magic picture, then it's at 106 where we start debating whether we're in for a sort of double bottom type scenario where maybe this trend starts to reverse. So we could look for some early signals that the trend is reversing. That, of course, could be aided, or you could wait at least for the confirmation of this down-sloping trend line, which has basically been defining this downtrend. Once we finally do get a break beyond there, then we may be looking for a push beyond the 50 level on the RSI and back up, perhaps still even up to these 108.40s where we had the big breakdown. So we're not quite there yet, but it looks like this downtrend for the time being is continuing. And if you are sort of day trading and you want to try and take advantage of this 106.60 down to the 106, sort of 60 odd pips for claiming there, depending on how we close the day today, could determine whether we make that extra little leg down to 106 conservatively, or obviously down these lows, near these lows, which is more like 105.50. Switching gears to the indices, so this is obviously the big question, isn't it? We've had the crash, how far back can we make it? I have to say the FTSE 100, our proxy as well, the UK 100, has been faring a fair bit worse than the others. So obviously this is the big crash week. We bounced back for the next few days. We bounced back strongly for one day basically, and then we've been chopping around since, and all we've really been trying to do is take out the resistance that was formed at that old low there, and there's obviously a bunch of series of lows here at this 7300 level, which has become quite a critical support on the top side, is becoming critical resistance on the top side. So you may have guessed it, but this 7300 is pretty critical for my interpretation of where we go from here in the FTSE. So I think if we can take this out, you'll notice it's a confluence of 7300, these old lows. It's also the 50% pullback, which is basically where we found that 50% pullback of the big drop. Of course, you could take the Fibonacci from the very high, but it just seems like the 50 here and then the 38 on the subsequent pullback seem to be working more consistently than the higher high. So, of course, if we do get some signs that this breakout is holding through the 7300 level, then I think there's a good chance we push back up to this little pivot area here, where you can see it connected a few lows and highs, and just goes a little bit beyond the 61.8. So it could just be that 61.8 level that does it, but as you can see, there's a bit of room for maneuver around these fib levels. They're not perfect, so maybe we stretch up to that 7440, which I think is probably the nearest 10-digit number that the market's been reacting to in these previous occasions. But given how we've struggled so far to make it anywhere even close to those old highs, I wouldn't be feeling particularly confident. And once we get up to the 7440, well, then we'll be reassessing whether we're in for another downdraft or not, and there'd be quite a good chance. But if we do close above it again, then the next natural level, if we're following this Fibonacci sequence, would be this 76.4, which actually does nestle in quite well with this little kind of high that we put in the break, and then the retest of that high kind of comes in about the same level as well, and it's a touch above the 7500 big round number. Switching gears to Wall Street, and as I mentioned, basically we bounced a fair bit further on Wall Street, and we've spent a lot, and then we dropped quite dramatically. We spent the rest of the time kind of digging back up and moving beyond that initial resistance from the first couple of days. And now, as of today, as we speak, we're attempting a breakout through this 25,400 level. So if today closed as it is, we'd be looking for little short-term patterns to carry on us up to where I think the big kind of breakdown happened, which I'd categorize up at this 25,950, which where we had this little kind of doji low here before we did the dramatic day sell-off. And you can see that it was actually where we had a bunch of kind of opens and closes in this little consolidation prior to that last run-up. So that would be the next target. Again, you can see that I'm not saying right to the top. Certainly that can happen, but I think a bit of caution is definitely warranted here. Even though the markets look okay at the moment, they look like they're bouncing back, I don't think we can necessarily assume that we're going to not experience another big sell-off somewhere up at one of these retracement levels. I think the higher we go up, of course, the higher we go up, the less likely it is. The higher we go up, the more likely it is that we've seen the bottom, that we've had a 10% correction, 12%, whatever you want to call it, and that now we're moving on into fresh record highs. So the higher we move up, obviously, the more likely that scenario is. But conversely, from a trading standpoint, we're not forecasting here, we're just trying to trade and make money. The risk to reward ratio of shorting the market gets a lot more attractive as the higher we get up here to one of these retracement levels. So if there are some little reversal signs, it could well be worth going for. Even if you'd argue that maybe a little small loss is more likely because the market's going to keep thundering higher, maybe it's worth taking that little small loss for the small chance that we get another massive dive lower. So if I bring on my fundamental picture here, that hopefully should sort of reiterate what I was saying here, that yeah, we're at this 2400, 2500, 400 level. However you want to play it really at these levels. I mean, this is more like a game plan for the week, but obviously we don't have the opportunity to dig down to the short-term trading patterns. Obviously that's all for you know, your kind of personal technique. Either you wait for a pullback to one of these levels after the break higher, or you just go with the momentum, go with the close on the open on the next day, or short-term opens and closes. But the general gist of it is that, you know, if we look solid above this 25,400, we should have a fairly straight route back up to that 25,950. Equally, if we don't manage to close here, well, we've already found support at the 24,850. So while that would be the first stop on the downside, I suspect we actually come down and retest these kind of opening and closing levels down here at the 24,100 level. Also worth noting, we've popped back above the 50 level. So if we can sustain that 50 level on the RSI, that bodes well for going up and challenging overbought areas again near 70. And let's look over at Germany. Germany not been much better than the UK, to be frank. Europe has certainly underperformed on the bounce back here, which a lot of people were saying otherwise. It makes for a nice story, doesn't it? The US led the sell-off, and maybe people are less confident in the US now, and they might want to switch gears to Europe. I'm pretty sure I might have offered that as a possibility during the correction, but it's not proved to be the case. US led the sell-off. US have done the best in the rebound from the sell-off. Europe's still looking fairly soft. So it's similar thing to the other indices. We're trying to break through that kind of initial recovery level, which I'll pin down at about 12,550 for the DAX. We're doing a failed breakout at the moment. So it's not only is it the 12,550 former high, but it's also the 20-day moving average. So if we fail to get above there, that wouldn't be a particularly good sign. We're still below the 50 on the RSI. You know, it wouldn't be, in my mind, a bad trade to try and fade the market. That said, should we manage to hold up of this 1250, or maybe it proves maybe today's a little false break to the downside, then we pop back up again. Obviously, that would catch a few people offside short, maybe even us if we were going for it, but we have to quickly reverse positions and look for a target up to this 12,800 level, which is where we saw this pretty obvious support before the down drop. So obvious support on the downside, didn't do too much when there was a big sell-off. Obviously, we closed below it. We tried to get back to it, could. I mean, I suppose that kind of low there, in essence, was where we tried to get back to, but it completely held as support resistance the first time. So the next test will be 12,750. If you want to kind of put that in as maybe your first line in the sand, and obviously it's as is often the case, it's a bit of a zone. So you could say 12,800, 750 to 800 maybe, or even 810. That seemed to look quite good too. So certainly watch out for this area for some renewed weakness should we push through the 12,550. Even though we're looking a bit soft for the moment today, I would assume, particularly based on, you know, Wall Street kind of leading generally where global markets go, I would imagine we probably do get another little push up here towards that zone that we've been talking about, and that would also probably coincide with the 50 level on the RSI, so that will be a kind of key thing. So basically looking at something along these lines as far as where the market can go, and should that 12,800 level hold well, then I think we're pushing back up to where that former support was, up at the sort of 13,150 level before we had that breakdown. Okay, pushing over into commodities. How are we doing for time? We've got plenty of time left, so let's get into this. This rising trend line has held so far. I mean, there was really only 2 touches. We've seemed to have put in a third, and we've broken to a sort of 1, 2, 3, 4 day high now. in gold as of today. We're seeing a bit of a push higher in the pound. We're seeing a push higher in the euro against the dollar, and so gold's doing all right against the dollar too. Quick reminder what this kind of weird looking trend line is. You can see we're pushing right into it here, and it has genuinely been offering some sort of pivot. I mean, that was the first test there, pushed above it, it was the support, chopped around there, dropped, it was resistance, pushed right above it. Not really mattered the last couple of times, admittedly, and now we're kind of stuttering around there again. It's different ways of drawing it, but I don't know. It's this trend line. Basically capping this whole consolidation that we've been in since 2013, which is quite an epic trading range. And so this could be one of the huge trades, multi-week, multi-month, huge uptrends potentially in the market should we actually get through here. So unsurprising that the market's finding some difficulty of actually breaking through, just because it could be so massive technically. But if we get down to this daily chart, what are we looking for? Well, I don't think we can particularly, even though it's very interesting, it seems to be having some effect, I don't think we can particularly rely on that long-term trend line from a short-term trading perspective. So I'm more looking at it from just up at this 13, I don't know why, I think it's connected to some high or low somewhere, maybe that high. 1357, it's about there, 1360 you could say, for being the round number. That will be key as to whether we've actually put in a triple top and come down and test the trend line. And equally today we're pushing off this trend line, but should we break through it, and then we probably come test this support level here at 1310, if not down that former resistance down at 1295. And another level to consider, these lows down here, we had a bit of a kind of stutter there. It's where the moving average is crossed, down at 1265. It's also quite interesting, few pivot levels earlier in the chart as well. So overall, I mean, gold basically is consolidating on a daily chart at the moment. You can see that it's just going up and down, above and below the 20-day moving average. So we're just looking for some clues as to which way it's going to break. We'll probably get it wrong a couple more times before it finally does it, but I think it should be a decent move once it does. And last but not least, we've got Brent Crude Oil. So another quite tidy trend line on this daily chart here. We tried to break through it several times, failed to do so. That's pretty bullish. We had that bullish engulfing candlestick as well. Took us right up to the 64.50, which was these few highs through here. We managed to break above that, stuttered a bit above this high at 65.50, pulled back to the resistance, became support again, and now we've pushed beyond the 20-day moving average. So oil looking pretty strong here. We're in a big long-term rising uptrend. It could ultimately fail at 70, but my feeling is at the moment is that we probably do need another test somewhere near the 70 level before we kind of put a top in. $68 will be interesting, so I've highlighted that as maybe the next interesting level to look out for. Because you could say that was a little short-term head and shoulders or triple top. So if we can rebound, retest that neckline and show some obvious failure pattern, while it is against the overall uptrend, it could offer some interesting opportunities down to that 65.50, 64.50 area, down to the rising trend line again perhaps. Right, with 5 minutes to spare, I think that's probably all the market's going to cover today. I hope that was useful, everyone, and good luck with trading today, and good luck with trading for the rest of the week. And I'll catch you next week. Cheers, Jasper signing out.